Hi, everybody. We're going to wait just about 30 seconds. I see people are joining at a fairly rapid pace. Just give it one more second. It looks like people are still joining. All right, we'll go ahead and get started. I know many of you on this webinar are Fund 2 investors. We have a couple other faces that are new to Trion, but my name is Andrew Lucas. Max Sharkansky is with me as well. I'm our Managing Director of Capital Markets. So I oversee our capital raising and our investor relations. Max is our co-founder and managing partner. We're just going to, I know we send out our quarterly reports, but we also figured it'd be prudent just to kind of do a quick webinar. We're going to do a fairly brief presentation just on, how Fund 2 is performing. And then we're happy to take the Q&A as well. And this is being recorded. So as long as you registered for it, you will get an email with the recording. So if you have to take a phone call or whatnot, don't worry about it. So we launched Fund 2 in midway through 2018, and we closed it in the beginning of 2021. And when we launched the fund, sorry, let me just change screens real quick. Oops. When we launched the fund, the whole goal of really the Fund 2 was to acquire underperforming properties in supply-constrained high-growth markets. And at the time, we were really active in California and Oregon, and we had planted the seeds to start buying in Colorado. So Fund 2 ultimately had investments in 18 assets in California, Oregon, Colorado, and that totaled nearly $500 million and 2,482 apartment buildings. And Fund 2 had about $28.5 million in commitments, and we're about a little more than a year after we closed the fund. We've sold 4 of those 18 assets, and we've distributed nearly $9 million. And that, when this distribution, we are in the process, but we're going to make a distribution either later this week or early next week. That total figure is inclusive of the distribution that will be going out either later this week or early next week. And the average IRR on the 4 deals that we have sold comes out to 43%. So we, even moving into a more challenging economic time, we've really added a lot of value to these assets. So we expect them to continue to perform well. And, one of the reasons why Fund 2, in our opinion, will perform so well is we allocated a lot of the Fund 2 money in 2020 post the COVID shutdown. So we were actually kind of struggling to buy deals in early 2020, January and February. The market was really hot. Every deal that we wrote an offer on had 20 to 30 competing offers. Then in March of 2020, the world shut down, and there was just a handful of groups out there buying properties, and Trion was one of them. So all of the money that we allocated in 2020, in our opinion, we got the deals at significant discounts, and they're going to perform extremely well. So here's the realized track record. We've sold Astor Park Townhomes, Andina. That's actually a typo. Andina was in Hayward, California, Edison in Greater Portland, and the Parker in Tigard. And again, those deals have performed extremely well. We are under contract to sell a property, Fox Meadows, in the Beaverton submarket. That property, again, because we've added so much value, is going to perform very well. The buyer has not gone hard yet, but we anticipate that to be another really strong realization. So here's just kind of a snapshot of the remaining portfolio. There are 2 of the most recent acquisitions are not on there. We acquired a property in Beaverton in the last day of 2021, and then a property in Sacramento earlier this year. But as you can see, really, as you guys, as our investors know, the value of
Andrew, hang on. I'm going to stop you for 1 second because somebody just wrote a question. Is there something on screen? Can everybody see what's on screen? There's a PowerPoint presentation. I can see it. Andrew can see it.
I can see it.
Can if you folks type in and say just yes or no? I can see it. Okay. Okay, great. So it sounds like the one person is just probably on their side. Andrew, I'm sorry I cut you off.
Yeah, no worries. Yeah, no, I'm glad you did. If I'm not the most technology savvy person in the world, so if there's a mistake, quite frequently it is on my end. But yeah, I'm glad everybody can see it. So yeah, basically what I'm getting at, as you guys know, the value of an apartment building is really, a function of how much income it generates. So the 4 deals that we've sold to date have performed very well. And as you see here, the deals that we've bought in, the Fund 2 deals seem to be performing extremely well. So we've really been able to juice the NOI. And that really comes down to, number one, very hands-on management. As you guys know, we are vertically integrated. We actually have Trion employees on site managing the properties, answering to the corporate office. And number 2 is just, we've really been able to dial in our renovations. We haven't missed on a budget in some time. And, it's just taking underutilized housing, converting it to a more modern, attractive place to live. By doing that, people are happily willing to pay a couple extra $100 a month. And then we self-manage, we control expenses, and that enables us to push the net operating income. So even, moving into the current economic cycle, and Max can expand on what he's seeing from a macro perspective better than I can, but we still expect this portfolio to perform extremely well given the current economic headwinds. And with that said, so Fund 2 is closed. We are in the process of closing Fund 3. So Fund 3 currently has investments in 15 assets. So you see here, we're targeting a 12 to 15% net IRR to our investors over a 6 to 8 year period. We are about 18 months into it. And historically, we haven't held deals that long. So our documents do say 6 to 8 years because we wanted to maintain the flexibility. However, I think probably 5 to 6 years from today, the fund will more likely than not be wound down. And as you see here, we do have different tiers of splits. So basically, if you invest less than 250, you get 74% of the profits, 250 to $1 million, 76, and then $1 million plus 78. So we didn't want to make it too punitive to smaller investors because our natural investor journey is that people typically do come in towards, with $100,000 or so. And then over time, as they see us perform, as they see our quarterly reports and get distributions, more often than not, they do, increase their commitment. But at the same time, if somebody is going to write us a 7-figure check, we need, it's fair to reward them for showing us that faith.
Sorry about the error in the document in that slide. It's not 7628, it's 7624.
Oh, I apologize.
Yep.
And then here, gosh, man, another error. This is Fund 3, not Fund 4. But this is the current portfolio. We currently have investments. It's about the Bluffs and Beaverton. Bluffs is a 2-property portfolio. Beaverton is a 3-property portfolio. But basically what you're seeing here is Fund 3 is very well diversified. It's really the same exact strategy as Fund 2, which is what you guys are familiar with. But the real difference is we have expanded geographically. As we sit today, Max is in Miami. He oversees our Miami office that covers the Southeast. And Fund 3 currently has investments in California, Oregon, Colorado, North Carolina, South Carolina, Florida, and Georgia. So in our opinion, it's an extremely well-diversified portfolio. If you're looking for exposure to multifamily with a lot of upside, but limited downside risk because you have limited concentration risk, it's in our opinion, a very, very solid portfolio and a solid investment. So just kind of getting back to the driver of value, this is every Fund 3 acquisition prior to April 1st of 2022. So as you see here, we've been able to really drive the NOI at these assets. The Russell which is the outlier on the downward side, that property was a fully stabilized asset when we bought it. So, this portfolio is overwhelmingly value add, but the Russell is a core plus deal. Basically, we were able to buy it was an off-market deal with a very motivated seller. So we're able to hit our value add returns, but not having to do the work. So Fund 3, like Fund 2 to this point, is performing extremely well. One of the benefits of coming in later in a fund is that you don't have to wait as long to start receiving distributions. When we buy a deal, typically it often takes 18 to 24 months prior to us throwing off meaningful cash flow, because we have to go in and renovate and get the incomes up. We bought a handful of the fund, I think like 5 or 6 of the Fund 3 properties in 2021. So there's already been a lot of renovation work going. So the fund will likely start distributing in January of 2023, and that will gradually increase as more and more of the properties become stabilized. So with that said, we're happy to answer any questions you have. Feel free to type them into the box. I'll go back to the Fund 2 realized track record. I'm happy if anybody wants to see a different slide, let me know. And Max, if I missed anything, or feel free to start answering questions.
All right. So one other thing on Fund 2, can you go back to the Fund 2 SREO?
Sure.
Fox Meadows in Tualatin, that property we took out to market, ran a process. We have awarded it to a buyer. So hopefully that buyer performs. It is a very well-known operator. They're probably top 25 operators in the country, and they will likely buy it, and that's going to be a great return. If they buy it at the purchase price where we've awarded them the deal, that'll be approximately a 1.75 multiple gross and a 30 to 35 IRR gross, and that's on a 2-year hold. So that property is going to do great as well. And I'm going to now go ahead and go through some Q&A. Distributions. A question is, would you talk a little bit about distributions? How do you compute them? Is it based on rents you're receiving or on funds put into the fund? No, it's not based on funds put into the fund. Distribution is based on cash flow, both through operations and through sales of assets. Distributions, with interest rates being where they are right now, are probably going to be a little bit less than we anticipated, but they'll be strong nonetheless. A lot of the properties in Fund 2 are stabilized, are doing great. And even though the cost of the debt is higher, we have significantly outperformed on our pro forma rents. So we should have pretty strong distributions going forward. Interest rates. Will these high interest rates prevent sales of assets at good prices? Not necessarily, because we've had so much rent growth. And because of tremendous rent growth, we've had huge asset growth. Fox Meadows, for example, we bought it for 12. Our basis is around 13.5, 14. We're selling it for close to $20 million. The deal is going to do great, and everyone should see a very nice return. Next questions. What are the characteristics of the debt being used to buy, and what are the T3 cap rate on these recent purchases? The characteristics of the debt, it's a little bit all over the place. If we get bridge on the last 2 acquisitions, bridge right now is going to cost you about 7%, 8%. So the trick there is, if you're going to buy with bridge debt, you impound a huge interest reserve, and you execute on your value add in 12 to 18 months and then refi out of it. And if you're going to go an alternative capital structure when it comes to debt, is agency plus preferred equity. And we're doing quite a bit of that too. We just closed one, and we're doing one more right now that we're closing in a couple months. And that's typically, 2, 3, like 5.25% senior with a slug of 11% preferred equity. So your blended cost is going to be 6.5 to 7%. T3 cap rate. These are all on the recent purchases. They've all been four, kind of 4 to 4.5. But we're getting a lot more. Where we're getting the discount is on the forward cap rate. So we were underwriting to 5.25, 5.5. Our recent purchases on value add 80s product has been like 6 to 6.5. And we just bought a newer asset at a 5.25 pro forma cap rate, which has, been unheard of over the last couple of years. Can you talk about any exposure in Florida, South Carolina, North Carolina from Ian? Yeah, we got out pretty much unscathed. No more than a few bucks in damage at any of the properties. We don't have to make any insurance claims, so everything looks good. What's the outlook for selling off Fund 2 assets? Timeline. As I mentioned earlier, we're selling Fox Meadows. That one will hopefully close by the end of January. And then everything else, we're continuing to operate. I don't think we're going to be selling any of these anytime soon, other than maybe York. As you could see here on this slide, we've increased NOI at York by 92%. We need to get through some evictions there and some buyouts of low-paying tenants, and we'll probably take York to market maybe by March, April of next year. And we all assume that by Q1 of next year, rates will plateau and there will be more confidence in the markets, and hopefully treasuries come in a little bit too. So it will be a much better time to sell than right now. So we'll take that property out then. And then as for anything else that we're planning on selling, we'll likely sell it after Labor Day of next year. How many more years do you anticipate it will take to close out the other 13 properties? It shouldn't take more than a few years. I anticipate closing these all out by 2026. What happens when a property is recapitalized like Astor Park? Is it still on the Fund 2 books? No, everybody has been cashed out. Is there a catch up for entering Fund 3 now so that earlier investors are compensated for entering early without knowing what was in the portfolio? No, there is no catch up. Earlier investors are compensated with a higher preferred return and a lower promote by us. So you're coming in at original cost basis. By when do you anticipate to complete all acquisitions on Fund 3? I would say by Q1, Q2 of next year. Everything will be done, and Fund 3 will be fully invested. Where is your office located in Miami? I live here and want to come by and meet with you. I'm in downtown Miami. Feel free to shoot me an email and we'll get a meeting on the books. Please compare prices of assets purchased for Fund 3 versus Fund 2. Compare cap rates or all the assets already in Fund 3. That's a loaded question. It's going to be really hard to do that just on the fly. But we didn't. What I can tell you, I think what's most important for Fund 3 is we did not buy any very low pro forma cap rates. A lot of our competitors were doing that. They were buying 4 to 4.5 forward cap rates, buying 2.5, 3 cap in place, underwriting to a 4 to 4.5 forward cap rate. We did not do that. We really didn't buy anything for less than a 5 to 5.5. You say when you invest late into the fund, you do not have to wait much for distributions. Is there any benefit for investing early? Is there a cost penalty for investing later? As I mentioned on the last question, we give earlier investors a higher preferred return, and we take a lower promote for our seed investors. So in Fund 4, which we're going to launch in the next few months, we're going to make that even more lopsided and create more of an incentive for earlier investors.
So it depends. We have some investors that are, if you're more cash flow driven, it may make sense to come in at the tail end of the fund because you won't have to wait as long to receive distributions. Then conversely, we have, a good bucket of long-term investors of ours that have been with us, 8+ years. They don't care about the seeded portfolio because they know our track record. They've been invested in multiple deals. So they'll come in early just to be able to get the better economics. So it's really, some people prefer just getting the best economic package. Others who are cash flow driven think it may make sense to wait until just before closing the fund.
Are there any thoughts on 2023 plateau and hold high, start to dip? I think it's pretty hard to predict what the Fed is going to do. But if you go by their guidance, which I do think is going to be the case, they're going to stop raising after the next 2 hikes, which will be this year. I believe one this month and one in December. And then rates plateau just over 4.5%. Once rates start to plateau and the Fed signals that they will no longer be raising rates, treasuries will inevitably come in and the market will be a little healthier. Transaction volume will pick up. So we think that's the direction the market will go. When do you anticipate Fund 4 opening? We should have our documents done by Thanksgiving, and Fund 4 will be open for commitments January of next year. Fund 3, once you close the fund, do you continue to make acquisitions? Great question. Yes, we do. It's mostly allocated, but we'll probably make another 1 or 2 acquisitions in Fund 3. The Fund 2 returns, what are they net to investors? It's impossible for us to answer because of timing that people came into the fund and what their preferred return is versus what their carry is based on how much they invested. That's why we show everything gross.
And we do, just to elaborate on that, we do outsource our fund accounting to a third-party administrator named Verivest. So, we purposely created an arm's length there. So they're the ones that calculate the preferred return, the distribution waterfalls. And then in addition to that, we do get, Fund 1, 2, 3, and ultimately 4 does get third-party audits on every property that the fund invests in. So we basically have 2 sets of checks and balances, that ensure that everything's done, according to the PPM.
That's it for questions. Does anybody else have any other questions? Okay. If not, shoot us an email. If you have any questions, follow up. If anything comes to mind, please feel free.
Yeah. Also, if you don't mind, if any of you give us feedback as to whether or not these webinars are of value, because historically we've just sent our quarterly reports. They're pretty detailed quarterly reports, 6 to 7 weeks after each quarter. But if our investors think there's value coming out of these, we can start to do these maybe semi-annually, just to give you another touch point on the fund's performance. And it looks like we do have a couple more questions coming in. Do you have a 1031 option? The answer is typically no. You can't exchange in and out of the fund. To accept exchange money, it significantly complicates the deal, and it adds a significant layer of legal costs as well. So we kind of have, and this is a moving needle, but for us to accept exchange money, it would need to be a 7-figure amount. It just isn't really feasible for us to accept anything lesser than that. And then on the exit, we did put a teaser out to some of on that Andina property that we sold. We had emailed out, there was about 30 or 40 investors asking as to whether or not they would be interested in exchanging. And we just didn't have enough of a consensus. So it's possible on a direct deal, there would be the option to exchange into a new Trion deal, but it's probably unlikely and definitely not guaranteed. Can we get a recording? Yes, you will be emailed a recording. If you registered for this webinar, you will be emailed a recording. Excellent value, very helpful. Thank you.
So going back to the 1031 question, the answer is actually yes. So if it is 7 figures or more, we have worked with some people where we've allowed them to invest into a deal. Details on fund expenses, they're pretty standard. Auditing, third-party administrator, some very, very light marketing expenses, not a whole lot. Did you say you are still acquiring assets for Fund 3? Yes, we will likely buy 1 or 2 more assets. Probably this Sacramento property we have in portfolio will go into Fund 3. What else? Are there any other questions we can answer for you?
Awesome. We do take IRA funds. Was surprised Fund 2 just added more. The final acquisition was, excuse me, I believe it was in May of this year. I know it was kind of the timing of it. A lot of the earlier acquisitions in late 2021, 2022 were in the Southeast, and Fund 2 was basically the PPM restricted it from investing in, I don't know, it's California, Oregon, Colorado, and maybe like Nevada, but we never ended up buying anything there. So it was, I agree, it took a while to close the fund out, but it was just kind of the way the pipeline worked out.
Do you take IRA funds? Yes, we take retirement funds. IRA, 401k, self-directed, absolutely.
Great. Thank you, everybody. Feel free to reach out to either Max or I or me if you have questions.
Great. Thanks, everyone.